those of you who are in Israel, I really hope you had a good morning so far. Have anyone in the US? So thank you for being with us so late at night. If you're in Israel, grab a cup of coffee. We're about to start in a minute or so. We have all of our speakers on the screen right now. And I want also to remind you that this session is being recorded. It will be later on available on all of our social medias. So if you want to listen again to any of the presentations, if you think that you missed something, you'll be able to watch those sessions again on our social media outlets. In the meantime, while we are waiting for our attendees to join in, I want to also welcome our speakers for this morning. Distinguished speakers, if you can just mute yourself for now as we are recording this session, that would be great. All right, so we have so many things to cover in this session of our Founders Foundations. This is the first meeting out of 6 additional meetings that the California-Israel Chamber of Commerce is holding during the next couple of weeks, really trying to provide a soft landing opportunity for Israeli companies coming to the US through California. And I really want, because as I said, we have a lot to cover, and I'm trying to be very sensitive of the time that we have. I think we will start with this session, and I really want to give you some background about the program. So today's session focus is on the 3 foundations that every company needs to carefully consider when launching its business. When you start your business in Israel, information is probably relatively accessible, as this is our culture, language, and so on. However, things get more complicated when you look to launch your business overseas. When we look at the US market, we need to understand the federal legal systems, company's tax structure, labor, employment regulations, and so forth. So to understand what is ahead of you, I have the honor to introduce our first set of speakers today, also our hosts for this session. I want to introduce Dr. Ayal Shenhav. He's the head of Gershon Company. He is the high-tech and venture capital practice and a member of the firm's executive committee. Ayal has many years of experience practicing law both in the US and Israel, and he is going to be joined by Oren Biran. He's also a partner and the head of the tax department in Gershon Company law firm. And with him, we also have Guy Gershon. Guy is also a partner at Gershon Company, and his expertise are in the labor and employment law. We also have in this first session today the pleasure to host Aya Shmueli. Aya is the founder and partner of Ogen Relocation. She can share some insights from her own experience, also on employees and employment in the US. So with no further ado, I would like to give the mic to Ayal and his team. Ayal.
Hey, thank you. Good morning. Thank you, Sharon. Also, I know it's quite late in California, so it's appreciate that you joined us. I'm going to host the first panel. Going to talk about the legal aspects of moving to California, and I'm going to do it in a Q&A format to make it a little more interesting. So there's a lot of slides about our firm, but I'll skip them and basically start with the first question and going down to Aya. And Aya, as was mentioned, is the founder and partner of Ogen Relocation, which is representing many founders who make this move, or many entrepreneurs who make the move to California. The first question is, what is the key to a successful relocation? You're on mute.
Yeah, thank you. So first of all, I'd like to thank the CICC for organizing it, and Ayal for you to invite me to join this panel. So the key to a successful relocation, from my own personal experience, and after assisting hundreds of families relocating to the US and in specific to the Silicon Valley, is that both you and your spouse should be involved equally in this process and making all the decisions together. You have to gather as much information as you can and decide together on things like which area you're going to live in, what size of house you want, where you're going to send the kids to, what is your budget, and so on. So all these things you should take decisions together. You should also involve your spouse with your work plans, like where the office is going to be, how is the commute, how many hours do you plan to work, will you have business trips? All these matters do affect the family on a daily basis, and everybody should know about these things in advance. So the more prepared the family will be, it will be much easier, and they will know what they're going to face in the relocation. So in bottom line, the things that the keys to successful relocations are gathering as much information as you can, involving the family in the process, taking all the decisions together with your spouse, and this preparation will help the family gain a positive attitude towards the relocation, which is definitely the key to a successful one.
Okay, great. I mean, just as a note, I was worked with Ayal and Zohar Levkovich at the time when they moved to California. So we learned together a lot about relocation. And Ayal, how did you find, tell us a little about the school system, and especially in California, what kind of schools do we have, the costs?
Okay, so
choose the right school.
Okay, so in general, the schools in California are considered to be very good, particularly in the Silicon Valley. The schools are free, but daycares and preschool, which are the ganim, are private. Also, what we call in Israel Trom Chova and Trom Chova, they're also private. So you need to pay for them, and it ranges between $1,500 to $2,500 a month. They have a long wait list for the good preschools. So once you know the relocation is taking place, just join a wait list. It's never too soon to join a wait list. As for the schools, they, like in Israel, they are divided to elementary school, middle school, and high school. But there is a difference in the elementary school. Elementary starts in kindergarten, which is Gan Chova, like we call Chativat Tzira, and it ends at 5th grade, Kita Hey. So elementary school is Gan Chova at Kita Hey, and Kita Vav is already in middle school. So that's a big difference. Also, a thing that I think you should take under consideration and know in advance that the placement in the grades is according to the age and the date of birth of the child, and the cutoff day is different from Israel. The cutoff in Israel is December, and in California it's September. So if your child was born between September and December, he probably will have to repeat the grade again. So I'll give you an example. If you have a child that is now going to Kita Gimel and was born between September and December, they will have to repeat Kita Bet all over again. So I just wanted to mention that because it's a scenario that will happen and you should know about it in advance. In general, the registration, it starts online, but only after you relocate. You cannot do it from afar. You cannot do it before you have an address in California. And now with just a note to know in the Corona days, They also vaccinate kids over the age of 12, but as of today, the kids don't have to be vaccinated to corona before attended to school. So that's in general about the schools.
Okay, it seems like a lot to know, and I'm sure there's much.
A lot.
But Ayal, the last question, and practical question is, okay, how do we find a house in California, and what kind of cost should we assume?
Okay, so the housing market, I don't know if you're aware of that, but the housing market in California, and especially in the Silicon Valley, is tough. There's a huge competition on each house. And because of that, the prices are going up constantly. And so it's a very wide range. But I'll give you an example for a house in Sunnyvale, which is the city that most Israelis are relocating to in the Silicon Valley. So a house for a family with 3 kids will range between $4,000 and $6,000 a month. This is a high rent, but the good thing, most houses are private houses, and you have backyard, which is nice. And when when you see an advertisement of a house, you see they say the number of bedrooms, and they actually mean bedrooms, like rooms with beds, and they don't consider the other rooms in the house. So you can go to see a house of 3 bedrooms, for example, and see a house which has a living room, family room, dining area, garage, of course, and might have also an office. And this is under the title of 3-bedroom house, so it can be a huge house, which is also great. Another thing that you should know is that you need to really act fast when you see a house that you like, because as I mentioned before, there's a huge competition on each house. You need to act fast, and you need to fill an application and show your credit score. But since you just relocated to the US, you don't have a credit history yet. So just prepare documentation in advance to show that you have the funds to pay rent. So documents like a letter of employment from the company showing your annual salary, a statement from the bank showing what is the amount in your saving account. So every documentation you can bring with you to show that you have the funds to pay rent, it will be great. So just be quick, be assertive, and get the house that you want.
Yeah, great. I mean, there's so much more we can talk about, but we don't have a lot of time, and I want to move on. So again, thank you, and obviously much more to talk about, but that is. So Guy, as we said, is a partner in our employment practice. He's very does a lot of work with people who move over to California and other countries. And Guy, so how do we employ someone in California? I'm an Israeli company. How do I employ someone in California?
Well, that's the very first thing that the company will need to consider when relocating an employee to California is who will actually be employing the employee in California. You can have 3 ways. You can either employ through an employer of records, you can employ directly with the Israeli company, or you can employ the employee with a local affiliate. And this issue is the first one that you need to consider because it affects almost every other labor-related aspect or choice that you make. So the questions that you have to ask yourself is whether you already have a local entity or not. Sometimes if you don't have a local entity and you don't have too many employees that you're going to be relocating, it might not be worth the while to actually establish a local company. You want to know whether local labor laws or laws in general allow foreign companies to directly employ employees in the jurisdiction. Sometimes it's time limited. And you also need to know whether you can employ under your foreign law. For example, if you're sending an employee to California, and you're employing him to your Israeli company, you're most likely going to send him with his Israeli employment agreement. which will definitely contain Israeli labor laws and for example, non-compete, the Israeli non-compete section, sorry. But what happens if that employee, after a certain period in California, will decide that he wants to resign your company and wants to start working for a competitor in California? Will the employment agreement that you provided him, will his non-compete section be enforceable in California? Will California laws allow you to enforce the non-compete, the Israeli non-compete? Sometimes maybe your Israeli non-compete is not even legal in California, and that's something that you need to consider in advance. Another issue could be pension and disability. What happens if the employee gets injured when he's working for the Israeli company in California? What happens with his national insurance in Israel? What happens with his pension? So these are all things that you need to consider in advance. And sometimes the best way, if you have to employ an employee directly in the US, is to have an addendum, which will only apply during the relocation and which will cover all different aspects of the foreign law, the local California law, that your regular Israeli employment agreement will not be covering.
Okay, Guy, look, there's a lot to be said, obviously, a lot of issues, but again, we're a little tight on time today, and I think I'll just move on to Ogen on the tax issues. And Ogen, obviously, tax is a huge issue when we go to the US. And I just want to ask you 3 questions, and maybe we don't have a lot of time, so you can answer each of them briefly. So number 1 is, let's say I started in the company as an Israeli company, and now we're moving to the US, the founders moved to the US. Should we flip the Israeli company to a US company? And if we want to do it, how do we do it?
Yeah, hi, okay, thank you so much. So a flip means an exchange of shares. So all the shareholders of the company, of the Israeli company, exchanging the shares into a US company. So after such exchange, the parent company is a US company and the Israeli company is a subsidiary. The exchange is a taxable event generally for the investors. However, there is a way to get a tax ruling from the Israeli tax authority that provides that no tax shall be due to the as a result of the exchange to the Israeli and to non-Israeli. The ruling, there are some restrictions under the ruling for a period of 2 years. So we cannot sell the company. There is some restriction about dilution, sales. For example, you can sell up to 75% of your stock in the company, but these restrictions, they are not really a burden from our experience. Of course, whether to flip or not is a business issue. A lot of companies would like to go into the US market, marketing, sales. Sometimes the investors require that the company will be a Delaware company or a US company. And of course, we have also need to take into account the stock option holders. So we need to roll over all the stock options into the US company. There are a lot of legal documents, but from my experience, I see a lot of companies that making this flip into the US and raising money into the US company.
Okay, well, let's say I decided to keep the Israeli company as my parent company and establish a US subsidiary, or vice versa. I decided to have a US parent and have an Israeli subsidiary, but I still need to do an intercompany agreement between the Israeli entity and the US entity. So maybe just, again, very briefly, and Sharon, maybe with your permission, we're going to take another 2 minutes to conclude this session. So Ogen, very briefly, what is an intercompany agreement and why is it needed and so on?
Yeah, the intercompany agreement is an agreement between the related companies, for example, the parent subsidiary, that reflects the transfer pricing between the companies. Such transfer pricing would determine what is the income and expenses to be reported by the parties to the relevant tax authorities, for example, to the US and Israel. A transfer pricing should be based on a study and based on the arm's length. It means how third parties would allocate the income. It could be cost plus, it could be a profit split method. In Israel, we have some regulations, and of course in the US. So the transfer pricing and the agreement should comply with Israel and US tax to make sure that the income and the expenses are allocated in the right way, that each tax authority will agree for such allocation.
Okay, Evan, last question for you, and this is on the personal tax side. So I moved to California. I was a resident of Israel all my life. Now I moved to California. I've been in California for, let's say, 5 years or several years. Do I still have to worry about Israeli tax, or I'm out of the Israeli tax system?
Okay, so the Israeli tax system is based on residency. So if you're a resident of Israel, you are subject to tax on your worldwide basis. So your income also outside of Israel is subject to tax in Israel. However, if you are not a resident of Israel, then you're not subject to tax in Israel. To be a resident of Israel, it is based on a place of center of life and days presumption. For example, if you stayed in Israel 183 days, or within 3 years for a period of 425 days, then you are presumpted to be an Israeli resident. However, the center of life test could change this outcome. And in addition, we have a tax treaty between Israel and the US, which would determine your residency. And in case you are not a resident, for Israeli tax purposes under the treaty, you should be exempt from tax in Israel on your income outside of Israel. Of course, there are issues. We need to take care of tax filing in Israel and the US, and to make sure that you are reporting in the same line, I would say, in the US and Israel. And you must, I would say that in order not to be a resident of Israel, you must pre-plan this move to the US and make the relevant steps to make sure that you are not a resident of Israel as of the day that you move to the US.
Yeah, great. Oh, and a lot of more questions I wanted to ask you, especially about stock options and about selling your shares after you move to the US. But I guess we leave it to the next time. And people will have to call you personally, I guess, if they want to know about selling their shares in the US or their options. So I will, Sharon, we will conclude this panel and we'll move it back to you. Thank you.
Thank you, Ayal, and thank you all for sharing your insight. Absolutely. This is just the ice of the iceberg, the tip of the iceberg, as we say, because there are so many things that we need to consider, from a personal perspective, from the company perspective. And absolutely, we know it's case by case. So if you have any questions, feel free to reach out. We can make the connections. We are moving forward, and we would like to share some information about possible financing routes that are available for Israeli startups. I know that there are many, as you can imagine, but for today's purpose, we have decided to team up with the Mizrahi Tehavot Bank and show you what financial mechanism a bank can offer you. And since we are short in time, I'd like to introduce Shiri Bergerson and Shai Avital. Shai, the floor is yours.
Thank you, Sharon. Thank you for having me. It's great to being here today. I would like, just before jumping into our presentation, I would like to say that about myself. I relocated to California 5.5 years ago, and I would like to reaffirm that all of the tips here are very valuable, and preparation is a must. So take notes, guys. All right, let's start. So as Sharon mentioned, I'm part of UMTB tech teams. I'm part of the UMTB tech team in the USA. Just a little bit about Mizrahi Tehavot Group. We're the fastest growing Israeli banking group with a balance sheet of $100 billion and a $6 billion market cap. Our story with the tech industry started 21 years ago. Since the year 2000, we're as the only Israeli bank to do venture lending. Today, we run this operation through global venture lending practice in both the teams in Israel, USA, and the UK, teams that specialized in tech and technology banking. And recently, in the last year, we added another very important player. The bank invests directly in tech companies through the bank itself, not through affiliates. We have with us from our team in Israel, Shiri Bergerson will expand on offering both debt and equity to startups later. Basically, our mission is to help Israeli startup companies become successful through funding. And as I said, we run this operation through 3 different jurisdictions, Israel, USA, and the UK. So venture lending is on the rise. I would say that it's even an understatement. In 2020, US VC-backed companies received debt financing valued at more than $25 billion. And you can compare that to just a decade ago, it was only $5 billion. So it's booming. For those of you who are not familiar with venture lending, I would just like to say that it's a type of debt financing obtained by both early and late stage companies, and can be provided by both banks specializing in venture lending, but also by non-bank lenders. Just the main aspect obviously we're short of time, so I'll be happy, to connect with each one of you one-on-one and to talk a little bit more about what we offer and what are your options. But basically, it's there is a collateral, obviously, blanket lien, some basic cash cushion covenants, 3 to 4 year terms, and you get usually a grace period of interest only for 6 to 12 months, and the bank gets an upside, which is the warrant aspect. So debt and equity better together. I think that maybe the main reason for why debt financing, why venture lending is booming, is I think that the understanding that debt and equity are not alternative products, they are complementary. So it's, when I say better together, it's actually much better for you as a founder to get a debt facility right after you get you finalize a round. The main reasons are that the momentum is strong, due diligence materials are in hand, you have a higher cash balance, so you just got an investment from your investors, you have a higher cash balance, the risk is much lower, so you could get much better rates. And it's also an insurance policy for you. It's an extra cushion in the event that the company needs more time to get to its milestone. So the pros of each, equity, obviously improving your balance sheet structure and financial ratios. New ownership should provide you connections and value and added value and open doors for your company. So now if you're teaming up with a VC, obviously that they will help you to expand your business into the US or other territories. And maybe the most important part is that there is no need to pay back. On the other hand, with that, there is no dilution and you do not need to set a valuation. That's very important for founders and their investors on the long term. It extends your runway to better future to better future round, and debt, not like equity, is a much faster process. It's a quick and focused due diligence. So we talked about the why, and we talked about the when you want to get a debt facility. Now let's talk about the who. In other words, who's going to be your banking partner. So obviously the market today is, as I said, is booming, is very, very competitive, but not all lenders are the same. We think that there are three main things that you would like to consider. First of all is friction. Obviously, you want it as low as possible. You want the bank to create value for you and not to be in your way. So obviously you want, let's start with the overall cost. You want the overall cost to be the lowest. You want also to get great service, but it's also very important for you to think about the future. And when I talk about the future, I'm talking about expanding, for example, to new territories, relocating to the US. So you want a bank that has the minimum cross-border limitations, that has presence in more than one jurisdiction. That's very important. And also the ability to scale up, meaning you want to work with a bank or a different lender that has deep pockets and the ability to scale up with you. Second part is partnership, is about the partnership. You want to work with people that understand your business. That's very important, the market, the ecosystem, and can help you with connections. You want to work with the decision makers in the bank, and not just, with the paper pushers. And the most important part here is you want a bank that, or a lender that would be able to work with you through difficult situations. Obviously now, now things are great, but you want someone that has a good reputation in when things get a little bit more rough. And the last part is the financing. And that's the third thing that you would like to consider. I would say even financing flexibility. You want to work with a lender that has flexible structures. You need to ask yourself if you're okay with a lender that is a cookie cutter, that basically does the same product for everybody again and again. Or maybe you want to work with a lender that provides a tailor-made solution that fits your business model and your specific needs. Maybe a traditional plain vanilla venture loan doesn't answer your need, but maybe a combination of a venture loan and a credit line, like based on your recurring revenue, MRR baseline, is the right product for you. And the last thing about financing flexibility, and Shiri will talk about it shortly, is the equity investments. You want to consider working with a lender that could also invest in your company. That's a game changer, and Shiri will discuss it shortly. So since we're kind of short on time, I won't expand too much about UMTB's product. You could read it here, and obviously, as I said, I'll be happy to go on a one-on-one meetings with each one of you in order to discuss your personal financials. But you could read here a little bit about our financial models. As I mentioned before, I think that we see each tech company as a unique company that faces different challenges. And when it comes to financing, we believe that we are more than just your loan provider. We believe that we're a true partner. We pride ourselves in allowing customers to reach out directly to the bank's decision makers, including myself. Just flew into Tel Aviv a few days ago, 15-hour flight, staying in isolation for a week just to have the opportunity to meet with our customers and business partners. But I think that most of all, compared to other Israeli banks, UMTB Group has the richest and longest experience in venture lending. We've been through multiple down cycles and rough times, and I think we earned our reputation of being there also during difficult times. And now the new and very interesting part about when your bank is also your investor, Route 43, Incentive Program 43. Shiri, the floor is yours.
Thank you, Shai, and I will speak shortly because the time is short. So UMTB started to invest direct in companies in November 2020 with Route 43. I don't know if you're all familiar with the program, but it means that basically the Israeli Innovation Authority gave like psychology push to the financial institution in Israel to start invest in the high-tech companies. So basically what we're looking is Israeli companies with more than $2 million ARR, venture backed. So, and then we have, and since November, we started to look at companies, and since January 2021, we approved 14 companies in our investment committee in different sectors. So it means that we have in our portfolio companies from cybersecurity companies, PropTech, digital health, AI, DevOps, cloud. We look for companies that we see the potentials and to grow with them. We look for companies with a short sales cycle, and our average ticket is $2-3 million per round. Our goal is to stay in the game and not just to be part of the Route 43. We have the we can invest in companies that are not in the criteria. Now we're focused more on that, but in the future we will do American companies as well, and also companies in different fields. I think that our benefit as a bank is, we're not going to open the doors for you in China, in US, or in different countries, and we are a quiet investor, so that means that we won't be involved in the board. Yes, we will take observers sometimes in the board, but we're here to help you to grow. So that means that in few of our companies in the last investment, we actually offered we did like a term sheet with equity and debt together. So I think you can show to the market that you have bigger rounds. So sometimes it could be like $15 million as venture lending and ARR and $3 million in investment. And then you can show to the market that your round was bigger. And we're here and as I said, we're here for a long time. So that means that if you compare it to venture capital, so once the funds end, so they need to raise more funds, and in the bank the money is not an issue, so we have more money to do the follow-on investments. One more thing about the investments in the bank, we usually follow the venture capitals. Once we follow, it's like we join to the investments. And Shai, next slide, please. So I think that our biggest benefit is once your banker invests in your company, it's a game changer. It means something, because bank, you can think it as an old institution, or the DD is long, but it's a say. It's something that you say to the market that the bank chose to invest in the company.
Okay, thank you so much, Shai and Shiri, for your input. As Shai mentioned, he is currently visiting Israel. So if anybody would like to know more about, what UMTB USA is doing, you can reach out to Shai later on. You can reach out to us, and we can also make the introduction. We are sticking to money, and we are moving to our next speaker for this morning. I also want to remind our viewers, our audience for today, if you have any question, please feel free to use the chat box and send us a question. You can send it privately, or you can send it to the group. and we will try to take your questions at the end. So last important issue we still want to cover is your tax strategies. And we are cautious about the time. I'd like to quickly welcome Gilad Pinhas. He's a partner at ERB. Gilad, I won't steal much of your time. The floor is yours.
Okay, hi. Nice to meet you all. I'm Gilad. I'm a partner at ERB. ERB is a global accounting firm which support a global operation of startups. 1 second. Okay, I will talk about financial and tax management and aspects of becoming global. All starts as Israeli entity and expand to the US, and then you have kind of an international operation which has to be managed. So about ERB, ERB actually was founded about 25 years ago in Tel Aviv, working and focusing only on startup companies. All our clients actually expand to California, New York, and some of them to Europe. That's why we expanded our firm as well. So we have accountant, tax people, and payroll people in all these locations you see on the screen. In general, this is the services we provide, which basically CFO, accounting, controllership, payroll, and tax, mainly tax compliance. So I will talk in a very high level, what are the main differences? So we'll gain a basic understanding what you need to be aware of when you expand your business to the US. On the accounting side, so it's very important to understand that the regulation in the US are very different. You're probably used to set up an Israeli entity. You're familiar with the local regulation about accounting, about how to manage the books, how to report to the tax authorities. In the US, it's a totally different. In Israel, for example, we need to use authorized software. In the US, you can use any software. You can even use Excel worksheet to manage the books. The bookkeeping in Israel, in the US actually is not mandatory. Small business are not actually do not need to manage books to maintain the books and bookkeeping, but in fact, it's a kind of necessity that companies must do in order to have ongoing operation. So the invoicing methods are different. How to keep the invoices are totally different. How to report on a monthly in Israel, even if you have zero operation, you must report to the tax authorities zero. In the US, it's not required unless you have employees or need to pay tax advances or you have sales tax. If you are a business with only, let's say, for first year, only expenses on a monthly basis, you don't need to report anything. But of course, you have at the end of the year to file tax return. On the payroll side, it's different, totally different. In Israel, we're used to a monthly payroll, and in the US, like it's every 2 months. All the benefits, let's say the health insurance, payroll process, pension plans, it's totally different. In Israel, it's very simple. We have like Chok Bitoch Leumi, Chok Brit Mamlechti. It's very easy. We know the law. It's very easy to kick off the payroll and recruiting people. In the US, it's a little bit different. Before you recruit people, you need to set up benefits. You have to engage insurance company. You have to engage one of the processors or PEOs like TriNet, Venture, Trinity, and do a setup processing. Setup processing, which means set up worker compensation, set up the payroll process, set up health insurance and 401k. Of course, it's varies from one company to another, and once you set up, it's a lifetime for the company. So you need to set up very properly, and this is why it's very crucial to pay attention and make it properly when you set up the benefits. Of course, another difference that you have to understand in the US that there are 50 states, and in 50 states, it means 50 different labor laws. So if you have one employee, let's say in New York, and you have your second employee in California, it's probably different. Things need to be adjusted on the legal side and sometimes on tax side. It depends. So in every company that you have employees, you need to register. In Israel, you do it once. You just open files. You go to the tax authorities, Bitoch Leumi, Mas Haknasa, Nikuim, etc. You have it open. But in the US, it's totally different. If you do not work with PO, you probably will have in each state that you have employees to go and register the company. Just in high level, 3 different ways to run payroll on the US. I will focus on processor and PO. Processors, it's more technical service that you get. It's outside the company, and they provide you the service of processing payroll, calculating, generating pay slips on a monthly basis. But they only give you, for the company, which means technical supporting. They do not take any responsibility and do not partner with you. PO, it's a little bit more advanced service. It's kind of co-employment for all insurance and for all the benefits. It's very recommended to work with PO. Probably heard the names like Trinet, Insure, Insperity, they're all PO. So it means that for benefits purposes, insurance purposes, it's co-employment. But on the legal side, the company actually employs the company. It really reduces the risk if there are mistakes, if there are low cases from employees. Many of them goes to PO and they cover it. This is why Israeli headquarter company who have a subsidiary and need to run payroll, PO is the most recommended structure to lower the risk, since probably as most companies do not have like the basic knowledge how to run payroll properly. Taxes, of course, also differences in tax compliance. In Israel, there is a one tax return. In the US, like could be even 3 layers of tax filing. There is the federal level, there is state level, and there is local level. For example, in New York, there is a state and city. So if you choose to have your offices and operation in New York City, you'll probably have to file tax return to New York City as well. In Israel, the tax advances payments are monthly. In the US, if they are, it's quarterly. In Israel, there is an audit process. Audit tax return in Israel must be, the financials must be audited, and the tax return is based on audited number. In the US, it's not required for small companies and definitely not for tax purposes. There is a different tax preparation method, but the numbers which are being filed to the IRS are not needed to be audited. And this is, many companies always ask me, who will do the audit? Audit is not required in the US for tax purposes. And of course, let's say about sales tax. Sales tax, you have 50 rates. Like in Israel, like it's a 17%, like one rate. It's very simple. The issue is like if the VAT applies or not applies. In the US, it's a totally different games. If you have like nexus in a state, you'll probably need to register in a state and collect the VAT if applies, and you need to run it and manage it properly, because it's like every state have a different rate which changes, and sometimes the sales tax rates within the states are different from one county to another. So of course there are systems, there is way, but the way to manage this operation, it is totally different than you are used in Israel. Of course, when you're in the US, when you file tax return, you do extension. The due date usually for most companies are April 15, and the extended date is October 15. Unlike Israel, when it's automatically the extension, in the US, you must file the numbers, the approximate numbers, which means by April 15, you will have to do all company transfer pricing adjustments in the numbers. Sometimes it converts the numbers of a company from loss to profit, which is a game changer in filing. If there are accruals or like expense reimbursement, all must be implemented before you file the extension. As I said, like audit needed is in Israel and not in the US. It's e-filing. It's very easy, so you can file from approve and file and from Israel in the US. And of course, there is the Delaware. That Delaware is not a tax return; it's a franchise tax. It's like similar like to the registered companies that we file in Israel. Okay, so when you do when you expand to the US, this is the process you have to go through. First of all, tax structuring. Which entity, if it's like LLC, C corporation, as Ayal spoke before, and need to do some flip or not. This is something you need to evaluate and before you go and expand. What would be the tax structuring, and use experts to support this. Of course, we spoke before transfer pricing study, transfer pricing agreement, global option plan. Usually, companies have like local under Section 102 option plan. When you expand to the US, you have to make sure that it covers the US side. If in Israel the 102 applies, Section 102 applies, in the US there is 409A that has to be covered, and then you have to understand how to actually grant globally the options. Of course, on the accounting side, you have to support like the consolidation, reporting, transparency for investors. You need to have like global chart of accounts. You have to convert the Israeli bookkeeping system into dual currency. It must be managed on US dollars, so the companies will be able to actually reconcile, which means like on the financial language is to talk to each other. The companies need to talk and think about all these intercompany transactions. Of course, there is intercompany accounts that has to be managed properly, and setting up new global procedures. Procedures, study of transfer pricing has to be updated from time to time, actually once a year, according to the Israel law. There is the transfer pricing compliance. It means that if you have the study, it has to be managed according to the study. To get a study and have agreement, it's not sufficient. You have to manage it at least on a quarterly basis to close the numbers and do intercompany invoicing according to the study and the agreement. And it is most recommended once you finalize the process of having the transfer pricing study from the experts. Be sure you know how to implement it, how to, you can even build the working paper and the process together with the transfer pricing experts to make sure it's compliant. Of course, it's very important to manage separate intercompany accounts, need to understand multi-state invoicing, which is different. Mainly, it's important for sales tax purposes. And of course, multi-state bookkeeping management. You have to manage the books and the accounting in a way that at the end of the year, you'll be able to understand how to file in each state where you have nexus to file the numbers for each state. Unlike Israel, that it's only one country and not multi-state. Of course, global options, there is the 409A and Section 102, as I spoke before. Sometimes if there is global audit, usually the audit needed for investors, if you are, let's say after round A, probably investor will ask audited financial statements under US GAAP, consolidated, make sure, so you need to global audit. So you have to close the number by June, July, preferably the earliest possible. So you get final numbers, so you'll be able to file tax return properly in Israel, in the US. The due date, as I mentioned, the extended due date is by October 15. And let's say if you finalize the audit in December and numbers are changed, so you don't sync with the tax return, probably you will have to revise if there are big differences. So it's most recommended once you become global and you have global audit process, try to finalize it by mid-year. So you will have the numbers properly in the tax returns. Of course, it's global year-end close for extensions, as I mentioned, reconciliation, accruals, TP adjustments. And of course, you have to build a global tax filing process. What is it? First of all, you have to understand that in the US, like as I mentioned, the main form is 1120. It's the federal form. It's for the entire operation of the company for the year. Then there is the state level, where you have nexus or presence for tax purposes. You will have to file in each state, potentially 50 state tax return when you grow. There are international level. It's the 5471 or 5472, depends if you're a parent or subsidiary. This is related for the Israeli related companies. You need to file it. The 5471 covers a subsidiary of a US entity. So if you have a Israeli subsidiary, you will have to file this 5471 with actually the full numbers. What you file to the Israeli tax authorities, you will have to file in the form 5471 to the tax authorities in the US. Of course, there is FBAR filing, which is about foreign bank accounts. There is the Delaware tax return, sales tax reports quarterly or monthly, depends if there are nexus for sales tax. There is the new economic sales tax. So if even you have sales in a state and you cross the threshold, there are thresholds for each state per transaction, could be per volume of operation in income. So you have to follow it. And once you have you cross the threshold, or you have the old nexus, I call it, they apply. So you have to make sure you file quarterly or monthly. Of course, there are 1099 reports for vendors at the beginning of the year. And of course, the global reporting system to sync the Ayal and US operation on the reporting size. This is I mentioned before. These are the forms 5471, 5472. It's very crucial to fill them properly, and most recommended to file this tax return after you finalize, or at least you have the final number of the Israeli tax return as well. This is part of the 5471. You see functional currency. So you have the US dollar numbers, and yes, you will report your shekels here in this form when you file this to the IRS. Why is that? We filed this 5471 as you just saw to the IRS, and you file the tax return in Israel. In each department, you have exchange information department. The Israeli tax authorities and the US tax authorities, they exchange information. They share information to compare the numbers you filed in each country to see you did not shift revenues, or you did not misreport tax return. Of course, there are some other common challenges on technical side, which software to use. Usually it's recommended to use local system, US system, which can sync to the all sales tax, all banks, all the payroll companies. It's very easy, environmental to work with this system. Many companies choose to start operation, let's say on Israeli software. It's very hard. It doesn't sync. Sometimes you cannot sync to US banks. You don't sync to the payroll system, et cetera, et cetera. So it's most recommended to use US software. These are the bodies. Of course, there are, when you start operation, sometimes before you have entity, there is, if you have a kind of an agent or salesperson on the ground, you have to be aware to avoid any permanent establishment exposure. Of course, we saw many times improper construction of infrastructure of the benefits, and the main issues we saw, it's kind of discriminations or potential discriminations, or having the start date of an employee before having working compensation, which is very crucial to have it. We even saw companies paid payroll monthly and not every 2 weeks. So you should avoid, be aware and should avoid. Of course, there are heavy penalties. Let's say you have to use local accountant or tax preparer who is familiar with global operations. We saw many cases that US tax people or accountant didn't file all required forms. The forms 5471 and 5472, they're very crucial. They forget it sometimes. you have to make sure you're covered with this, because companies get like $10K penalty per year per form. So you have to be aware of this. Of course, you have to be aware that in the US per state, there are benefits and incentives. There is a group, there is a called Select USA. It's in the US Embassy, and what they do, like they can offer you benefits and incentives in all states. All 50 states offer that, and sometimes it's very beneficial for the companies. So just be aware you have it. Of course, some other issues: relocation, visa, business plan for visa, the cease of residency on the personal side needs to be covered, cost of standard living, destination services. Of course, there is the 80th re-election, and each of them we can discuss thoroughly, but we don't have much time. Just be aware all these highlights that has to be.
Wow, Gilad, that was a very thorough a marathon.
Yeah.
Kudos to you to cover so much in such a short time. And really, you know, we only have 1 hour. Unfortunately, we could not have it in person as we originally planned. And, you know, we really wanted to dig, you know, deep into each one of those section and each one of those topics that we really just tried to give you some idea about all the considerations that you have to take into account, and you could see how everything, you know, is just weaved, you know, the tax with the labor and employment and the funding and the structure. So there is not just one consideration that you have to take into account. So, you know, if we talk about labor, for example, I took myself some notes, right? So you need to think about where is your employee, where is your office, what about work from home, at least here in California. Here it talks about the end of 2022, for people to keep working from home. What happens if people move to a different state? And then, of course, the whole employment structure that Gilad was talking about. And we heard a little bit earlier about it also, in terms of outsourcing and consulting and advisors, and do you have to pay them? You don't have to pay them. Listen, there is so much to cover, and of course the legal structure that we didn't even speak about. What is a C Corp, an S Corp, and you know, the different ways you can register and why everybody's going to Delaware, and the IP transfer. And boy, we can have, I think we can have a session for an hour on, you know, each one of those topics. But again, because we are short of time today, I really want to thank each one of our speakers today. They will be at your disposal if you have specific questions. You know what, each company is different. You have different, you know, requirements. You have your own different, you know, structure and your needs. And please feel free to reach out to our friends at Gross, and of course our friends at ERB and Bank Mizrahi, to ask them your specific questions related to your company. This, as I mentioned earlier, this session was recorded. It will be available to watch again on our social media and also our partners' social media. Thank you, Gross and Company, for hosting today's session. We still hope that we will be able to do it face to face. And as I said earlier, enjoy a good coffee together. If we don't have any question, any last word from our speakers? Anyone want to mention anything? Of course, Ayal, Shmueli, also thank you to you, Ogen Relocation, helping a lot of Israeli families moving around the world with a base here in California. Thank you all for being with us today. Ayal, any last comment or word?
First of all, it was a pleasure. Thank you for organizing and thinking about this, and always happy to cooperate with the California Israel Chamber of Commerce, obviously with Bank Mizrahi and ERB, and hopefully we can again, as you said, meet in person in Israel or California in the near future. And thank you everyone. Shana Tova Israel.
Shana Tova, and thank you all. Goodbye.
Thank you.
Shalom.
Bye.
Bye-bye.